Hey folks, Scott Rinehart here, Carlson Financial, and today we're continuing our discussion on the stock market and elections and how that plays into it. So today we're going to get into how it's performed under Republicans versus Democrats. And no matter which side of the aisle you are on, you might be a little bit surprised about some of our findings. So first, let's start with why might the stock market do well or better under Republicans? Well, in general, Republicans are for lower taxes, lower regulation, and just in general, very much want it to be a free market with as little government intervention as possible. Usually these things can turn into a free-flowing economy, which flows into a good stock. On the other hand, why might the market do well under Democrats? Democrats a lot of times have redistribution policies, which put money in the hands of people that need it most. So this is through increased unemployment benefits, increased child credits, and food stamp support. So instead of cutting taxes at the corporate level and then flowing that through to employees, it just puts the money straight into their hands. And what this turns into is the fiscal multiplier. What that means is that you put the money in their hands, they spend it on stuff. And that goes into the economy, which flows into the stock market. So just a different way of going about it, but it is possible for the stock market to sell under both Republicans and Democrats. So let's look at that. Returns by president since 1952. I have to admit, I was surprised when I saw this stat. The market has actually performed better. The S&P 500 anyway has performed better under Democrats since 1952. Democrats have averaged 10% per year, Republicans 4.8%. In this chart, you can see the average return for a presidential term has been 10.3%. Now, the thing that might sway this a little bit is George W. Bush from 2000 to 2008. You know, he got hammered by the bookends of his term. We're going to talk a little bit more about that. So I wanted to look at more recent history and dig into that. And one thing I was really interested in is how the market did right after that president was elected. How did it do all the next president was elected? So that's what I wanted to see. You know, when Trump did, the market really did well the rest of 2016. And that probably wasn't because things that Obama was doing. It was because the market was taking in some of Trump's policies that were lower taxes, lower regulation. So this is what these numbers reflect. So Trump was up 71% as of September 2nd. Obama was up 167% during his time. You can see George W. Bush is the only one that was negative. Clinton had an unbelievable run in the 90s. We'll talk about what happened there. Bush Sr. did okay at 56%, and Reagan had a great run at 95%. So let's look at recent Republicans, the things that went on during their tenures. You know, Trump lowered taxes, lowered regulation. That's what allowed the market to really do well. But also had the U.S. and China trade war plus coronavirus, which kind of probably held the market back from where it could have been. George W. Bush, he inherited the market during the dot-com bubble crash, and then the end of his tenure was marked with the housing bubble and the great financial crisis. Now, how much of that can be blamed on his administration? I don't know. That's up for debate. But we have to admit that despite being negative 18%, I don't know that we can put the sole blame on George W. Bush for a bad 2000 to 2008 stock market. Bush Sr., he had to deal with skyrocketing oil prices, which caused the markets to tumble early in his tenure. And, you know, at the end of his tenure, the economy slowed because there's a commercial real estate bust. Overall, the stock market still did okay. It was up 56% during his time. Reagan, they had higher interest rates, which was used to combat inflation. I'm sure a lot of you remember inflation was crazy back then, and it ended a long recession. You know, the 80s, communism was in decline, free markets were on the rise, so the markets did really well under Reagan. A lot of people give Reagan a lot of credit for the 80s. Now, recent Democrats, Obama, he inherited the stock market in the midst of the great financial crisis. So at the very beginning of his tenure, you know, things were still going way down, but then he benefited from low interest rates, an increasing Fed balance sheet, and just a surge in technological innovation that we saw during that 8-year time frame. Clinton, he inherited economic conditions with low inflation. This was great for the stock market. And then technology companies just absolutely exploded, caused the bubble in tech stock, took off. The stock market was just crazy at the end of the 90s, but then it finally did kind of come back to earth. And then George W. Bush had to deal with kind of the tail end of that. Now, what this tells me, when I look at this chart, I see red and blue, Republicans and Democrats, but I also see a stock market that went up a lot over time. And the further we look back, the bigger time scale we look at, the more confident you get that the market goes up over time. Administrations have limited control. I know sometimes it feels like whoever president is going to cause the stock market to go up or down. That's just not the case all the time. Certainly they have variables that play into it, but there's too many other variables to say that just because a Republican is elected, the market's going to do great, or if a Democrat's elected, the market's going to do great. There's just too many other variables. So I think the key takeaways from this research is that the market has done well under both parties. The president is just one variable, and policies are really more important than the party. If we look at the Democratic ticket, Joe Biden, his policies are a whole lot different than if Bernie Sanders was the Democratic nominee. So looking at a big role in how the market might do, whether Biden's elected or Trump is elected. So what we're going to look at here in future weeks is how policies might affect different sectors in the stock market, and also how Congress might have a bigger role than even the president does. So if you have any questions about any of this, you know where to find us, 844-CARLSON or carlsonfinancial.com. Thanks now.